importing from wherever they are, even if the duties are higher. I think the way we have to look at it is slightly different in my perspective. I think what we have to look at is we have already reduced tariffs on some of the products which are imported primarily from the US. We had brought down duties on certain sections of wine. We brought it down on whiskey. We had done it for certain motorcycle parts and auto parts, which we had already brought it down. But the US still has gone ahead and imposed the 26% duty. I think what India should maybe want to do in the short term is to try, and which is what I think Mr. Goyal referred to, where he said he's now going to change the inverted duty structure. He's going to bring down tariffs on intermediates and raw materials so that our manufacturing and our exporters benefit. And we continue to have the same kind of tariffs on finished products so that we do end up protecting some of those areas. The areas which I think are vulnerable for us, like in the agriculture sector, certain MSME sectors, will continue to be protected with tariffs, and I don't see that going down in any way. Whichever way you look at it.
All right, Mr. Vishwanath, I will come back to you. We will definitely discuss pharma. We have discussed a little bit. I want to continue that discussion in a bit, but I also want to discuss with you agriculture, but we'll just park it for a moment. I want to introduce my friend Kranthi Bathini, who joins us this morning. Kranthi Bathini is equity strategist at Wealthmills Securities. Good morning, Kranthi. Good to have you back on News9, but not good to see the mood of the market this morning. I mean, it started completely red. We are seeing a little bit of recovery in a few sectors, especially in the banking space. It was all red. Now we've got Bajaj Finance inching up a little bit in the green, and we've got Jio Finance, also Bajaj Finserv. Some of these stocks are coming up in the green, but the IT sector is not having a good day at all. It has not been having good weeks and good months, but today particularly seems really bad for the IT sector. Are these primarily fears of inflation in the US, which will keep US interest rates high, and that is playing out on the Indian IT story this morning?
Yes, Karthik. Good morning to you. Good morning to everyone. You are absolutely correct. The IT is the most affected sector at this point of time because right now the questions of US growth are rising at this point of time. By and large, US economy is going to will definitely go through a turbulent phase in the next few quarters. That is the reason, and also the inflation is genie for the US that can create more pressure on Federal Reserve to take any kind of action with respect to the interest rate cycle is concerned. These are the key concern. This is the reason we can see the immediate impact on IT at this point of time, but surprising moves. We have our Indian pharma companies do have a strong exposure towards the exports towards the US. That's where the greater concern was there. But today, all the pharma stocks could able to digest, and pharma stocks all are flying at this point of time. They are all green, and it's a very exceptional day. All the pharma stocks, both in the cash market as well as derivative market, all the pharma stocks are up at this point of time. So we need to exactly go through each company specific, how much the impact that's going to have on their revenues and in the coming quarters. That's what exactly one need to look at this point of time. But by and large, the big, much anticipated, unwarranted moves that do came, by and large, Indian markets tend to consolidate at this point of time going ahead.
All right. I want to also come to you specifically on energy stocks this morning, Kranthi, and energy stocks are also reeling under pressure. Is the fear in the energy stocks right now the fact that because Trump has gone ahead and imposed the 2nd April tariffs as high as 26% on India, much higher on many other countries, including Vietnam, China, Thailand, Bangladesh, Pakistan, etc. But the fact that that since one set of tariffs has been imposed, the second set of tariffs, which is on automobile sector specifically, have been imposed, then US is going to go ahead and impose secondary tariffs on countries that import oil from Russia. So even though India has increased, I was reading as high as 67% increase in oil that it gets from the US, but the fact that Russia still continues to be India's biggest oil partner, do you think there is fear in energy markets this morning because Trump will go ahead and impose duties on Russian oil importers?
Karthik, one thing is, apart from the tariff, what's taking place and how Trump is moving the coins, but right now The question is the tariff implications are going to have domino effect on the global growth. That's where what we are witnessing at this point of time is whenever the question of global growth slowdown that comes into the picture, that's going to have an immediate impact on the in the energy sector by and large. That's where the right now the pressure is getting created with respect to the energy sector is concerned. Apart from the tariff war that started overnight, by and large, how the global growth is going to accentuate in the next few quarters. That's where the key concern for everyone than the current tariffs at this point of time with respect to energy as a sector is concerned.
All right, so that is the concern on energy as a sector. Mr. Vishwanath, let me draw you back into this conversation. So we did see that pharma sector has been exempt from duties. This 26% duty is not applicable to India's pharma exports going into the US, but India has for many years, for as long as I remember at least, and I'm sure your memory would be much longer than mine, Mr. Vishwanath, India has been really protective of its agriculture sector. There's no word coming in specifically on agri. I remember even 22, 23 years ago when late Arun Jaitley was the Commerce Industry Minister at WTO meeting at Cancun, India was vehemently fighting against tariffs that WTO wanted to impose on India's agri industry. Now, is agriculture also slapped with this 26% tariff in the absence of specific mention of excluding it? And what does that mean for India's pharma sector? Agriculture sector? Mr. Vishwanath, if you could unmute yourself, sir.
Sorry, I'm sorry. I think the pharma sector has been has primarily been excluded because at least I think 30 to 40% of the US government procurement on pharma is done by Indian generics. So it is important for them to not include pharma in terms of the duties there, and that's I think has been a great relief for the pharma sector.
Yeah.
From the agricultural sector, I think there are a couple of areas which will face duties there, but I think the biggest hit would be the fish, meat, and the processed seafood.
Right.
Because right now our exports are about 2.5 to 2.6 billion kind of exports that we do have into the US. We also have processed food, sugar, and cocoa exports happening out of India, which is about a billion. And then we have cereals, vegetables, fruits, spices, which are about close to 2 billion, 1.9 billion or so. So I think this is certainly an area which is going to face some bit of an issue when we are going to export into the US because of the higher tariffs. But at the same time, I think the US has been very keen to bring down tariffs in India for some of its agricultural products. And as we go along, I'm sure we would be able to have some kind of reciprocal maybe exchange in terms of bringing down tariffs in this area. But right now, I would think it would have, at least for the next 6 months, an impact on India on each of these areas.
All right. You specifically did not mention sugar, wheat, rice. These are also critical exports and comprise
Absolutely.
a good chunk, about 50% or so of the world's food basket. So do you think
Yes.
these staples are also likely to get impacted? Because I understand
Yes.
fisheries, etc., would be a much smaller chunk. The entire wheat and rice basket would be a much larger chunk for India.
For India, the largest is fish, meat, and processed seafood.
Okay. All right.
Then it is followed by processed food, sugar, and cocoa exports.
Right.
And then we come to the cereals, vegetables, fruits, and spices. So
Right.
that's the kind of way India exports out to the US, and this is to the US. So I think the largest hit, therefore, would be the fish, meat, and the processed food for us in terms of when we look at it.
All right. And hypothetically speaking, Mr. Vishwanath, if India was to cut tariffs on agriculture imports coming in, then do you think there is a chance of, let's say, cheap corn and cornstarch from the US flooding the Indian markets? Or in your opinion, that is an overestimation of India really demanding such products into the country?
No, I seriously don't think the government would think of cutting tariffs on agricultural products. I think that is a vulnerable sector. We have to be extremely careful. Unlike in the manufacturing sector, it will take us a long while to get competitive there. I think that's a sector we need to protect quite well. So moving forward, I think there could be some areas like a few bit of almonds or pistachios and things like that where we could cut tariffs. But an overall reduction in agricultural tariffs is not something which I think India would ever do because it is a vulnerable sector and needs protection.
All right, let's bring back Kranthi Bathini into this conversation. Kranthi, we are seeing not much change in the Nifty 50 heat map. We are still talking about the same sectors which are reeling under pressure, but not too much downside. In fact, before you joined us on this broadcast, we had Nishal Maheshwari, and Nishal Maheshwari said that the news on tariffs is worse than what India was expecting, but the market's reaction is better than expected. So do you agree the Indian markets have not reacted as negatively as they could, given this sentimental call, at least on 26% tariff?
Absolutely, Karthik. By and large, the advantage for India is, of course, the tariff negotiations going to impact in the next coming weeks also. But right now, as the question of US growth is going up at this point of time and the inflation worries are going up, one of the key concerns what Indian stock market faced in the last few quarters have been the unprecedented exodus of foreign portfolio investors exiting Indian markets, or at the same point of time exiting the emerging markets, and with a greater anticipation that the US growth is going to be very firm and strong, and they went back and invested in US markets in the last few quarters. Whereas at this point of time, by and large, the sentiment on US markets are becoming gradually negative, and there are concerns that have been rising because of the moves done by the US administration at this point of time. There are greater concerns with respect to the US growth in the medium to short term. That's where again the focus is coming back towards markets like India. That is the reason we can see some kind of a resilience in Indian market at this point of time. Definitely, there would be a reversal of these FPI flows going ahead. Look at our PMI index, Purchase Manager Index, which has come at a 8 months high. That shows the strength in the domestic economy. By and large, our Indian consumer, Indian consumption is going to drive the markets going ahead. Of course, exports are crucial, but by and large, Indian markets are in a better place in the global entire arena at this point of time. That's where we can see some kind of a strength that is emerging on Indian markets at this point of time.
All right, Kranthi, before I let you go, the question that I think everybody who invests directly or indirectly in India's stock markets would have, and that question is that what happens to FPIs and FIIs, the inflow versus outflow story? Given that we are in this situation now, the part of the uncertainty, at least with respect to whether or not Trump will impose tariffs, is out of the window. Trump has gone ahead and imposed tariffs. Now, I think the question is, are these going to be there forever? Is there going to be some negotiation? And even if there is a negotiation, it will bode better for the Indian market. So the kind of uncertainty which was there, which was surrounding traders and investors, is now a little bit out of the window. So there is more surety in the direction that Indian markets are likely to take. So my pointed question is, with this surety now in the Indian markets and the situation given for the next 6 months or so, what happens to FPIs and FIIs?
Karthik, very interesting question. Stock prices are slaves to earnings. We are entering into the Q4 earnings are concerned. If we could able to show the resilience and also in the next coming quarters, if the earning outlook is quite strong, definitely FPIs are bound to come back to India. Most probably, there are the joker in the packs like the monsoon, which is crucial for India. So the earnings and monsoons, these are the key drivers that are going to drive the Indian markets in the coming quarters. By and large, the PMI data has been quite strong. That shows the strength of the forward-looking order books of the companies, and also at this point of time, how the monetary policy of RBI is going to come, whether would be a surprising rate cuts. Inflation has been cooling off, and the policymakers have been trying to give the more headroom towards the growth at this point of time. These are the factors that are going to drive. By and large, Indian markets are more resilient and insulated in terms of the consumption is concerned. In terms of the FPI flows are concerned, we have witnessed an unprecedented sell-off, but despite of that, we could be able to hold on to above the 23,500 level earlier. Today we are at 23,000 above. It shows the strength of the Indian markets at this point of time.
Right, and now we also have Teresa John, Deputy Head of Research, Lead Economist at Nirmal Bang, joining us this morning. Teresa, good morning. Thank you for taking our time. Kranthi was just mentioning that all eyes would be on next week's RBI's Monetary Policy Committee meet. And I think the markets and the average citizen is factoring in a 25 basis point cut. And I think the situation becomes a little more urgent now to go ahead and cut the interest rate and spur the economy back into motion, because I doubt the commentary that will come from the RBI Governor Sanjay Malhotra's mouth is going to be very positive for the outlook for FY26, given the 26% tariffs that we have now been hit with.
Yeah, so we are also expecting a 25 basis point rate cut in April. I don't think the 26% tariffs would materially alter the trajectory for rate cuts. Yes, the tariffs on India are slightly higher than what was expected by the market, and it is largely across the board. There will be certain exemptions, for sectors like pharma. And it's not a blanket exemption, but there are certainly exemptions there. But I think even domestically as well, we are under a cyclical slowdown, and I think that is what will trigger the rate cuts more so than the tariffs that we saw announced last night.
Right.
And also the fact that inflation is now below 4%, so that definitely gives RBI some comfort in cutting rates, so we don't have to worry too much about inflation at this point in time.
Right. So I was waiting for you to join this broadcast, so I did not throw this question to Kranthi, but I will bring this question to you. And I want to understand the inverse relationship between gold and stock markets, given that stock markets are reeling under pressure. We are seeing gold is touching record highs again. In fact, it's trading at about 93,500 or so in India right now. What happens to gold prices from here? Because markets are likely to be in a state of flux for the given point of time, and the fact that US may not cut rates, India may cut rates, the differential between interest rates is going to increase. FPIs, FIIs may continue to outflow and hedge on the US dollar and not as much on emerging markets. And in all of this volatility, gold becomes the safe haven, which we've seen cycle after cycle. How high do you expect gold prices to go from here?
So we don't have a target on gold prices, but in general, as you were also rightly pointing out, during times of uncertainty, gold generally does well. And this time around, we've seen the situation where actually central banks have been buying up in a big way. Particularly emerging market central banks. So you had the Russia-Ukraine crisis, and then everyone saw that if there are sanctions imposed on the country, you can't do much with dollar reserves. So people have been actually shifting some of their reserves to gold. So that has actually been very beneficial for gold over the last couple of years, and probably that will sustain. So definitely positive returns from gold this year as well, given that we are living in a very volatile and uncertain world. But as I said, we don't have a target for gold prices.
All right, no target for gold prices. But Vishwanath, Mr. T.S. Vishwanath, I want to come back to you and I want to understand from you, given all that is now likely to unfold in the world, there's going to be high inflation in the US. Some guests pointing out, experts pointing out, US may be hit with recession. US sneezes, world catches a cold. This adage has been doing the rounds for decades. Emerging markets likely to be hit, manufacturing nations like China, Vietnam, Thailand, Japan likely to get impacted, India definitely getting slapped with 26% tariffs. Given all this turmoil which is likely to now unfold slowly but surely in the world, what are those one or two things that India must hedge its risks against? What should India do? Is it time for India to buy more forex? Is it time for India to buy more gold? Is it time for India to open the world to cryptocurrency? How does India hedge this volatility which is now going to hit the market and hit the economy?
I think on what India should do with cryptocurrency or with gold, the other panelists are better to talk about. I could talk to you both from a policy perspective.
Sure.
Sorry, Karthik. I think from a policy perspective, what India should certainly do is use this opportunity to cut red tape that at the best possible way. it should break the ease of doing business at the center of all the policies that it undertakes.
Sir,
It
we've
should
been
now
talking
stop.
about that for the last 5 decades, if not longer. India needs
Yes,
to cut red tape.
yes.
Yes, India knows it needs to cut red tape, but for some reason the scissors don't work. The red tape doesn't get cut.
So that's where the issue is. Now we have come to a point, I think, where the WTO, which was set up with much fanfare, I don't think is going to deliver much for us going forward unless there is something to revive WTO. So which means there is nothing. There's going to be no multilateral trade body which is going to boost trade. It has to be a bilateral. And I think from a policy perspective, we need to put in a lot more effort into building bilaterals that actually lead us to far higher growth. We are renegotiating. We have opened up with the ASEAN. We are renegotiating again with the ASEAN to try and have a better deal with them. This is part of the process which happens every 2 years. But this time, I think India is very serious. As I said earlier, the India-EU FTA is likely to move forward, and that's something which can give us a huge market.
Yeah.
And I think from a policy perspective, we need to look at things very differently. I think the old way of functioning will have to change, is
Right.
how I would think we should look at it.
Right. What do you make of the commentary which Indian leaders, including Prime Minister Narendra Modi, are now making on China? Do you think it's time for India and China to behave like good neighbors? Galwan aside, what has happened in the past, the skirmishes aside, just in pure economic interest, is it time for neighbors to act like good neighbors, shake hands and get better trade going between the two countries? Or do you think with that, India continues to be at the receiving end because we can't match up to China's competitiveness in manufacturing?
No, I think India has made the right efforts to try and have things going with China. Now it is for China also to reciprocate. One has seen some good signals happening in the last few weeks. We have all been noticing it. Many people have asked, is this a response to what's happening with the US is doing to the rest of the world? It could be that, but I think it is time for India and China to. I mean, I think India has made the right moves in the last few weeks, if you did realize. We are allowing Chinese investments to come in. We
Yeah.
have had some very good discussions happening on both the sides. And hopefully that will move forward, and all the tension at the border would hopefully melt away. But that's something which the defense strategy guys can tell you better on that.
All right, sure. Let's bring back Teresa. John, Teresa, I want to understand from you, in all the calculations that you've done in your research team and as an economist, at Nirmal Bang, I want to understand from you, is there a number that you have on what is kind of impact that the Indian economy could see now with this 26% tariff? I'm not sure if you would have factored in 26% as the tariff rate or not, but the fact that now we have this 26% tariff here upon us. Until yesterday, before we knew this number, there was an estimation of 0.1 to 0.2% of the GDP taking a beating with tariffs, reciprocal tariffs by the US. But this universal 26% tariff rate on India across categories is something that we've just discovered. So I don't know if it's a calculation you can do at the back of your hand, but do you think there is going to be a sizable impact to India's GDP going forward?
It's I think still a little early to say what the exact impact would be. The reason why I'm saying that is so the tariffs were imposed last night. If you saw his speech, so basically he wants people to come. At least Trump wants people to come to the negotiating table, and there has to be a little bit of give and take on tariffs. That was his entire rhetoric in the speech that he made. So I think it's still early days. Definitely 26% is not what we were working with. At the upper end, we were expecting around
were you looking at
20%.
20%? What was the number that you were working with?
So our expectation was that probably around, say around 20 to 30 billion dollars worth of exports would be hit. So if you take India's exports to the US, it's
Right.
around ballpark around $80 billion, give or take $2-3 billion here or there. So out of that, say around 20 to 30%, we were expecting hit on 20 to 30%. So now the impact or it would be significantly higher. Obviously, there are exemptions in certain cases, and that exemptions I think will only increase as the days go by.
Okay.
But definitely higher than what was earlier. What people are penciling in, and what even we were penciling in earlier. So I think it's still early days to calculate the exact impact on GDP, because that will depend on the negotiations that take place over the next few days, weeks, and months. If you do have a bilateral trade agreement, if India kind of gives in to some of the US demands, what we will be looking at 6 months from now would be a very different picture from what we are looking at today.
Right.
So to that extent, I would say to quantify the impact would be difficult. But if I just take, I mean, let's look back on history in the 2017 to 2021 period. We didn't see exports decline to the US. Obviously, the tariffs then were much less than what it is currently.
Sure.
But we did see like exports stagnate.
Right.
We could see a similar situation maybe for the next 1 year till we get, because in the near term there is going to be a lot of uncertainty, so that could have some hit on exports in the near term till we get clarity on what the exact nature of a bilateral agreement or what the negotiations would be.
So we can't determine the exact impact on India's economy just as yet. I appreciate that, Teresa. But Kranthi, can we expect an immediate impact or a number on how you see at least this calendar year markets faring? Because it seems now that the September highs that we saw, at least on the benchmark indices, is now looking like a distant dream, and it's fairly unlikely that even by September 2025 we will reclaim those levels, or will we?
Karthik, we need to see the things how they're going to have. By and large, the current, the entire episode is going to have at this point of time, a neutral impact on Indian economy at this point of time. But there are some domestic key drivers. Look at our GST collection, which has been going up month on month, which is a positive, one of the key parameter for the economy, shows the domestic strength. In terms of the markets to go to the previous high, one thing is the first and foremost is how the behavior of the FPIs. That's what we need to observe in the coming quarters, and also the earnings. Q4 earnings are extremely crucial, and as I mentioned, the joker in the pack is how the rain guards, the monsoon also one of the key important factor at this point of time. If these factors are in positive way, definitely markets are bound to take the new highs.
Right. One final question, one line answer. With better, with correction in valuations now on Indian stocks, does it make a case for FPIs to actually reconsider India more seriously?
Definitely. The long only funds have been considering the Indian markets at this point of time. The recent correction gives a good entry level, but all the eyes on the Q4 earnings.